who enjoyed the 3-day weekend and is ready to get back to work? We've got many big events happening this week. A new administration is taking office, we have an SPAC conference, we have the opening of online sports betting in Michigan, and potential move towards legalization in New York, both of which can be huge catalysts for sport betting stocks. And we've got the start of a lovely earnings season. And with all of this in the forefront, many people are coming from far, and many people are coming from wide with one simple question. And that question is how? How, Charlie, do we live a meaningful, happy, and fulfilled life? Wait a second, no, this channel is about making money. Who needs happiness when you got stock market? So in this video, we're going to be talking about the top 3 stocks for this week. But first, we must talk about what happened last week. Okay, in last week's top 3 stocks video, we spoke about WFC, Wells Fargo. Wells Fargo had an earnings coming out on Friday. We talked about playing pre-anticipatory runs and post-reactions, but definitely not holding through the earnings. The pre-anticipatory run ended up running from 32.50 to 35.1, which is like an 8% run. In normal times, I'd say, yes, this was a great run, but because of all the other plays that we've been talking about, 8% seems like kind of a boring run. But anyways, after the pre-anticipatory run, it ended up getting beat down upon earnings, and this is why we always stress not holding through earnings, because you can't control the risk of earnings reactions. Okay, next we spoke about Riot, and it was quite a riot last week, folks. Riot was a crypto miner play that I said last Sunday. If it dipped, it would be a great buy. And likewise, it did dip down to $20 and then back to $29 before cooling off a bit again. Mara, lovely Mara, was another one of our crypto plays. They unfortunately gave us a certain finger last week with their offering, but that's okay. And I am still very bullish on Mara and Riot if crypto continues rallying. Crypto didn't really do anything exciting over the weekend, but if crypto picks up this week, we can expect Mara and Riot to pick up. If it doesn't, then we have more buying opportunities in Mara and Riot. And the most exciting play from last week was probably CCIV. This is the rumored merger play with Lucid Motors. We talked about it on Tuesday and it had a few more wild rides going as high as $21. For those of you following on Friday, there were some rumors that CCIV had been confirmed to be merging with Lucid. This caused a series of rapid fluctuations and SEC halts, but to date, it's just speculation. It's actually insane the impact that I don't want to say fake news, but the impact that fake news has on these stocks. A fake rumor can easily be spread as a fact very quickly, and then people act on it, and then it causes these huge fluctuations. Make sure that all of the news that you get is coming from a reliable source. But anyways, as I said on Thursday, my take is that CCIV will likely get the deal, but still, this is one of those plays where you buy the rumor and you sell the news. And of course, I have to remind you that the stocks on these videos are battlefields. These are not little playgrounds that you take your children to and you say, go off and play, you little children. No, folks, these are battlefields. I point you to battlefields that I see value in and I explain why I like them. But of course, it is up to you to decide if it even makes sense to go into battle in the first place, and whether you're even trained enough to go into battle. Do you know what to do if you're actually in battle? I'll give you a hint, it's not randomly wield the sword. So many people close their eyes and go running into battle like, and then they get stabbed in the neck. So please, folks, always do your own due diligence. I don't want to see people, with neck wounds. And of course, the only thing that I ask in return for this video is that you hit that ravishing like button and also subscribe. And quick plug for folks who are looking to learn how to trade, would like access to our private chat and morning briefings. Well, we do offer ZipTrader U. If you find yourself sort of dabbling around in the stock market without a clear structure, well, this is the program for you. So if you'd like to learn more about ZipTrader U and what we offer, I'll go ahead and put the link in the description below. Okay, so there is an SPAC publicity tour happening on, Happening on the lovely January 19th. Now, the big presenters are XL Fleet, which has already gone through its merger, APXT, which is yet to go through its merger with AvePoint, and PRCH, which has been consistently uptrending for days. But the one that I'm most excited about here is XL Fleet. If you remember back 3-4 weeks ago, I said if we can get this in the low 20s, this would be a great deal. It's now trading right where we wanted it, at just over $20. But at the same time, not super surprising. There's no new catalyst. It's been kind of starved for publicity for a while, and it's gotten pretty much no attention. So this SPAC publicity presentation is going to be the first catalyst that I see for XL Fleet since the original merger. And XL Fleet is essentially an electrification transportation company. They work on electrifying commercial vehicles. Instead of a company having to purchase a whole new vehicle, the company can instead just drop their vehicle off at an XL Fleet service center and have them electrify it for them. Now, admittedly, this is one of my more contentious plays because XL Fleet's promise isn't so much decades in the future as with most EV stocks, but the promise is right now and in the transition from gas cars to electric cars. Think of it this way, right now EVs are still a small subset of the population, and it's going to be that way for at least another 10 years, if not more. In the beginning stages of an EV transition, or at least a transition into more sustainable cars, well, you're going to have a lot of companies that see the benefit of electric cars, but don't want to shell out tons of capital to replace their fleets, and rather would just electrify their current fleets. And that's really the pull with XL Fleet. It's something that's relevant now and in the next 10 years, and at the end of the day, results speak for themselves. XL Fleet has already leaped ahead of its competition because of its transitionary nature. It's more relevant now than the other ones because the technology is easier to adopt, it's cheaper, and it's already here. XL Fleet is already ahead in terms of units sold in 2020 and units to be sold in 2021. And look, again, I know that a lot of people disagree with my opinion on XL Fleet, but my take is that this is one of the more reasonable options for EV stocks that are actually showing proof of concept right now and actually have value right now instead of companies that are promising things that are mostly not going to be fulfilled for 10-15 years. And this is especially true in the commercial sector of EV. And at these prices, I have to say this is a good deal. So let's see if this presentation wakes XL up. Okay, next, DKNG and PENN. These are two sports betting stocks that I'm looping together because they have the same catalyst this week. But keep in mind, we'll be clarifying the difference in about a minute. But mobile sports betting platforms have become increasingly popular, and the legislative environment for them is projected to increasingly become more conducive, which is a great combination for companies in the sector. Online sports betting is legal on the federal level, but in terms of a state-by-state basis, it's only legal in the bright green states on the chart. The biggest markets like California, Texas, and New York have yet to legalize it. Three big catalysts this week that point to more legalization. Number one, Michigan online sports betting will be going live with operators PENN and DraftKings among the list. Results of Michigan taking this live will show the potential for the sports betting niche. And catalyst number two, New York Governor Andrew Cuomo expected to formally tell the New York State Gaming Commission to solicit bids from mobile sports wagering operators. If this eventually leads to being able to operate in New York will easily be the biggest market available yet in the United States. But unfortunately, this Cuomo action is a bit of a push-pull. It's unclear if he would push for a single operator sports betting system or a multi. Obviously, if it's a single operator, that means that only one company is going to win. But if it's a multi-operator system, that opens the door for more companies to win, including DraftKings and PENN. It's also true that Texas is taking early steps to explore the online sports betting market as well. Now, in terms of our plays, the thing I really like about PENN specifically is that they partnered with Barstool Sports. I believe they own like 35% of the company or something, but the partnership deal with Barstool Sports means they have essentially free marketing and free social proof because Barstool Sports is one of the most popular podcasts listened to, which means that PENN has a huge leg up in terms of marketing while also not having to pay anything for marketing. But at the same time, the one weakness that I don't like about PENN is that it's also a traditional casino operator that operates brick and mortar casinos, has a ton of employees, and has a sort of traditional mindset when it comes to gambling. And I do think that's going to weigh down PENN a little bit more than its competitors. There's a lot more potential in terms of online mobile betting and online casino type activities, and so anything but that I think is going to weigh down companies. In comparison with DraftKings DKNG, you have a completely innovative business model that is totally focused on the new online way of gambling and sports betting. But either way, with more legalization, both are going to be huge winners, and that's why I put them both on this watch list. Lastly, Lemonado. Now, LMND has had the perfect storm of bad catalysts. It had a share offering, it went up massively without taking a breath for weeks, and it got hit with a negative short seller report. All of these things alone would have created massive selling pressure in Lemonade, but together this was a perfect storm for a beatdown. And what is Lemonado? Well, Lemonade is essentially a disruptive insurance company that uses innovative tech and artificial intelligence to make the process of getting insurance more efficient. It's very popular amongst millennials, and it has a good shot at shaking up the insurance industry as a whole. Back in my day, I'd take the trolley down to the insurance shop, but I guess kids these days are just too impatient. But honestly, to understand a company like this and why it runs so fast when it runs and why it gets beat down so fast when it gets beat down is you have to understand the types of people that invest in this. With companies like this, you have a lot of people that buy the stock specifically specifically because it has a lot of buzzwords in it, like artificial intelligence. Right now in the market condition, we have a lot of what I'll call overnight experts. People who read one or two things about how a company is innovative and it's a disruptor. People who are naive and very easily convinced to buy a stock just because Joe Schmo said that it was an innovator. This is a disruptor. Do you not believe in the future? The future, folks. Artificial intelligence. You must buy. And then these new traders act like they're overnight experts and they pour tons of money into these stocks. Then all of a sudden, when it's run up a lot, you have short sellers that decide to pounce because they understand this market. They're like, okay, well, if we cast doubt on the business model, focus on negative aspects of the business model, a lot of these new traders are going to lose all of their faith because they didn't actually have an understanding of what the company did in the first place. And that is what you see over and over again with a lot of the companies that are called big disruptors. But unfortunately, this happens to both good companies and bad companies. In the case of Lemonade, I actually think this is a disruptor. It's a good company. Personally, I think the short sellers are just hammering the fact that they know that most people don't understand this business model. And it's also due for a correction anyway. So they figure, okay, I'm going to pounce now and change public opinion so that it can benefit me in my short position. So this is what I'm going to say. If I had to do an analysis on this chart, I'd say this is going to cool off another 5, maybe 10%, and then we see it bottom out and start recovering. If this can fall even more than 10%, this is like an obvious buy. It's hard to say if more short sellers are going to pounce on this before it bottoms out, but I think maybe 5-10% more and then it starts recovering. My take with this one is just don't believe in the fear. Wait it out, we're going to get some recovery. Okay folks, well if you have any questions, feel free to reach out to us in the comment section below or join us on the lovely ZipTrader Circle Facebook group. I'll also put the link to that below as well. And if you're wondering what broker to trade these stocks with, well we always send new traders over to Webull and they are offering 4 free stocks if you both sign up and deposit with our link in the description below. And lastly, if you'd like to learn how to trade, we also have ZipTrader U with our morning briefings and private chat linked in the description below. Anyways, folks, have a great day and I'll see you in the next video.